that kind of change for us all. Isn't it? Restart.
Big move in Bitcoin then, in contrast to all the notes I wrote pre-show, which were telling me that this was going to put Bitcoin under pressure.
The narrative that perhaps this launch of these political meme coins will sap flows from Bitcoin is showing us that it's really not the case this morning. If anything, it's just accelerated the momentum and the excitement around cryptocurrency under another Trump administration.
Hi, Dewald. What is all this FOMO about? Should I buy Bitcoin now?
Are you smoking your socks? You should rather watch my show. You should rather watch my show.
All right, legends, as I mentioned on Friday, I will do a live stream on this weekend, and today is Sunday, it's still weekend here on the live stream. I'm not expecting a lot of people to join the live stream. I mean, it's Sunday, people like to spend time with their families, but let's analyze the price of Bitcoin and what an epic dump here from the stock markets. I was looking at the S&P 500, the Nasdaq, and it is crazy to think that an entire more than a year worth of price action, okay, it's almost here at these lows over here. So since April, May, this entire move here to the upside has been erased in such a short amount of time. This is a massive, massive correction on the stock market. This is not Mickey Mouse price action here, legends. Stock market has absolutely taken a dump. S&P 500 had one of the biggest drops that I have seen in a very long time. 7.7% drop in one day. That is absolutely insane. Okay, that is trillions, about $2 trillion wiped from the stock market in 1 to 2 days, right? That is bigger than the market cap of Bitcoin that just got erased in 2 days. Let's just give it 2 days, right? I don't think people realize how significant this drop has been here from the S&P 500 and from the Nasdaq. Okay, basically retracing from August 2024. This is where price is now, here on the weekly time frame. At the moment, it basically just erased the price action that it took to build here to the upside more than a year, and it erased it. Well, August, and we're not in August yet, so less than a year, right? But it's almost at these lows. Just erased from the stock market. And then we look at Bitcoin, go here onto the daily time frame, and I'm like, what is happening with Bitcoin? Bitcoin is not doing much of anything at the moment, right? It is holding on. It is still inside of its little triangle, building a little triangle. Are we going to break now to the upside? Now that's the question. Bitcoin is holding on as per the thumbnail. Right? You would have expected to see this. And I mean, if Bitcoin had to retrace an entire year's worth of price action, well, okay, so let's just see here. From August, okay, so the Nasdaq, just to put it into perspective, this low over here was in August. That is the S&P 500 low over here, okay, in August, right? The 5th of August when we had that flash crash. It's there. It retraced the entire move. The S&P 500, this was August. Right over here. It retraced already the entire move from August. If I look at Bitcoin, there's August. Okay, I would have expected to see this. Right, and Bitcoin is just holding on. Now the question is, I do see a lot of rumors, social news on Twitter, on YouTube, that Bitcoin is decoupling. Perhaps this is the time for Bitcoin to shine. It's decoupling from the stock markets. It's showing strength. Gold and Bitcoin is showing strength towards the rest of the markets. Ooh, if that is the case, right, legends, then we most probably just going to consolidate inside of this little bear flag that looks like it wants to break down. Maybe we get a fake out to the downside, and then we continue here to the upside. Right, we will go and analyze the situation here on the smaller time frame to discuss the probabilities, because at the end of the day, right, we are day traders. We just want to long from support and short resistance at the end of the day. Legends, remember to smash up that like button. Let's do a little bit of technical analysis. I'll also say hi to the beautiful community in a moment. Remember, the links for the exchanges that I use is always down in the description. Okay, right, let me just change this over here. I haven't set my things yet, right? I literally just switched my PC on, analyzed the charts, and I was like, let's go live, right? I want to chat to the beautiful community. Okay, you go down to description, you select more, it will open up the description, and I always have the first link down in the description is weeks where you get that 50% cash back on the money that you deposit in your features account, 0% maker fee, and 25% discount on your taker fee. They also have that competition still running, of which we are all inside of the Bitcoin Census team. Planning to scrape some money from the market. Okay, Bluffin, all you need is an email and a password on Bluffin and on Phoenix over here. And on Bluffin, for every time you move $10,000 worth of volume, you get a chance to spin this wheel where you can win some Doge, MacBook Pro, 8pots, right, features, bonuses, and also the money that you deposit in your features account, you get 10% cash back. Right, legends, so these are the exchanges that I use to do all of my trading, okay? And I have spoken to these exchanges where I bring you guys the best deals so that when you sign up with these links, it doesn't cost you anything extra. In fact, you only benefit from the deals that I've organized with these exchanges. So if you're not trading with those links down in the description, what are you waiting for? Okay, right, legends. Skeptical, let's see, skeptical about decoupling, but also you can't place tariffs on BTC. There's no earnings or anything like with stocks. Yes, but there's always been like Mr. Rave, I agree with you, but there's always been that correlation, okay, regardless of the fundamentals or the news. Stock market takes a dump, Bitcoin takes a dump. Stock market goes up, Bitcoin goes up, right, regardless of the fundamentals. But now for the first time, I haven't seen a big dump like this on the stock markets and not on Bitcoin. That is a bit weird, okay? I think the decoupling that I have seen and that most people have noticed is that stock markets are going up aggressively and Bitcoin is struggling to keep up. That is the decoupling that I have noticed over the last year or two, where everyone is saying S&P 500 is making all-time highs, NASDAQ is making all-time highs. Why is Bitcoin lagging behind? But every time the stock market takes a little bit of a dump to the downside, it aggressively drags Bitcoin down with it. But now the opposite has happened for the first time. Okay, the opposite has happened. The stock market has taken a massive dump, and we would have expected Bitcoin to do a similar thing. Right? And it's holding its ground here at the moment. Okay. But, legends, there is BTC will follow. Yes, there is a bearish case scenario on Bitcoin. Perhaps it's lagging behind. Perhaps it's still going to take the dump. Right? Maybe Bitcoin is just preparing for the dump over here, because you have to acknowledge that this is a bear flag. This is not a bull flag. Okay? If price comes from the top to the bottom, it forms a triangle. The probabilities of breaking down is much higher than the probabilities of breaking up. Okay, usually you get a fake out to the upside, and we already got a fake out. Maybe we'll get a second fake out and then we'll drop. Okay, so legends, let's zoom in to the 4-hour time frame and let's look at this structure. Okay. let's go to this little structure over here. As per the live stream last week, many live streams last week, in fact, okay, let me just take these two trends out the way. I don't need that one and I don't need that one. Okay, cool. This is now the structure that I am watching at the moment. Right, and one could argue, well, maybe that is the low, maybe the low will still be in, but let's just put it like that for now. Okay. So, legends, this is an incompleted WXY corrective structure, which unfortunately still carries the highest probability. This structure has the least amount of mistakes inside of it. Okay, which says that there's a high chance that the X is either in, maybe the X or the E is in over here, or it was in over here, or it still needs to be completed. But this follows the bear triangle as well from a pattern perspective, where you form A, B, C, D, E, and you fall to the downside to go and complete the Y wave. Now, this little bad boy over here can get quite aggressive to the downside. Okay? The minimum target for the Y wave, the absolute minimum target, is taking the low of W. This is the low of W. Okay. From an Elliott wave perspective, there's a rule that states that if it does not hit a common retracement target, it needs to at least take the low of W. So it could literally do that. Bounces, and it finds upwards momentum. Then you have fulfilled the minimum requirement. Okay, so now let's get really bearish over here. Dewald, well, what is the maximum target for the Y wave to the downside? It does not look pretty, legends. You take your trend-based fib from the high that we've created, the all-time high at $109,000, to the end of W. To now, this is the question. I don't know where X is going to end, right? If we start getting the breakdown here to the downside, maybe the E wave was in over here. But for the purposes of speculation, I'm just going to put it over here. Okay, it will give us rough estimated targets here to the downside. Okay, now I want to zoom out a little bit and look at this entire structure. And I can even switch this off. Okay, we have the targets for a Y wave to the downside. So this is basically what we are now looking at, legends. Okay, you have a W, X, Y. Okay, let me switch on the lines because people like to see the lines. Right, now this little Y wave, where can it end? The first target for a Y wave is the 0.618. At $66,000, 400. Okay, but now remember, it's estimated targets because I don't know where the X is going to end. If the X is going to go a little bit higher, I will drag this up. If the X is already in, then that basically means this is where I need to draw it from. Okay, but let's speculate that the X is still going to go a little bit higher. Maybe another fake out from the triangle to the upside, and then we come tumbling down. The only rule, there's one rule. If price continues up and it takes the high at $88,600, if it takes this high, this scenario is invalidated. This X is not allowed to take that high. Okay, then we'll discuss the bullish case scenario. As soon as we take this high, then, ladies and gentlemen, okay, we can then say that Bitcoin has officially decoupled from the stock market and is most likely going to find upwards momentum. But let's stick now, for now, let's stick here with the bearish case scenario. Okay, what is interesting about these levels is the first level is at the 0.618. Okay, then we have the 786, and the most common target between these two levels is the 0.618. So the most common ones I'm going to circle over here. The 1-to-1 extension is also very common target. And the one that I see gets tapped the most often is the 1.236. Okay, this is the maximum target for a WXY, max. Okay, let me put it in there. And this is going to look absolutely bearish as hell, because this means that you are going to take the low. And this, ladies and gentlemen, from August up until this point is exactly where the stock market is at the moment. Look at August. You can see it says 5th of August, and the 1.236 is just ever so slightly a little bit below. So there is a chance that we could get an aggressive Y wave here to the downside. Okay, you form a double bottom and you continue momentum back to the upside. This is unfortunately not a really good market structure change, because once you take the low, you are changing macro market structure, where you have a low, you have a high, and now you are forming a lower low. But it could be a move that no one is going to expect, where it creates a double bottom, and we all know how bullish double bottoms can be. It happened on the USDT dominance. We see it everywhere, okay? You create a double bottom and it just explodes back to the upside. People think that macro market structure has changed. It basically grabbed all of the liquidity and it continues momentum to the upside, because you have to consider and acknowledge that this is a WXY. Now, that, my friends and ladies and gentlemen, is a corrective structure. It is not an impulsive structure. Okay, it's a 3-wave corrective structure, which means it increases the probabilities of forming impulses back to the upside and continuing the bull market. Okay, but I think what is interesting about the 1.236 level, and I'm not saying that we are going to get there, legends. I'm not saying that we are going to get here. What makes this level so interesting is the fact that the stock markets are here compared to the August low. Okay, if I look at the S&P 500, here's August, the 5th of August, right? It has taken the low already. Here's the NASDAQ, okay? Here is the 5th of August. It has taken the low already. So it's just interesting to point this out, that if Bitcoin is going to follow suit and it takes the August low exactly like the stock markets have done at the moment, it is still a corrective structure target where Bitcoin can still find its feet and continue momentum back to the upside. Right, so it would be interesting to see what's going to happen next week. Are the stock markets going to continue the fall here to the downside? Or was this the liquidity grab and they're going to start finding their feet and start continuing momentum back to the upside? Okay. So nice little correlation, but you have to remember that all of these targets are Y wave targets. It's not to say that it has to come to $47,000. The Y wave can find support underneath the W. Okay, there's the W low. It can literally do this and continue. It can find support by the 0.618, and you can see that even this 0.618 has massive support. Okay, look at the support over here. A multi-month consolidation area. You're going to bounce here on top of the highs, and you also have these order blocks over here. So this is a massive area of support. It's going to take a lot of price selling pressure to get price just to fall aggressively through this entire consolidation area. Okay. Right, so legends, this is the most bearish case scenario. Okay, the most bearish case scenario, worst case scenario is $47,300. It's basically the low that we've created on the 5th of August. This is also where the stock markets are. Okay. The structure here to the downside does not look impulsive. It does not count sexy as a correct or as a impulsive structure. It's a very corrective structure. It's very overlapping with each other. It counts beautifully in worst case scenario as a WXY, which is a 3-wave corrective structure, which means that this impulse and this correction is going to send Bitcoin back to all-time highs. So perhaps this is the flash crash. This is the C19 crash. Do you guys remember the C19 crash? The world's coming to an end. Bitcoin is going to go to zero. Stock markets are going to go to zero. And then the money printer went on. And then all hell broke loose and we went into a parabolic bull market that no one expected. Okay. You guys remember this? I'm sure everyone remembers the C19 crash. Okay, where can it like to be? Where was that C19 crash? Okay, it was it here? Right, no, this was the previous. Here we go. Sorry, I'm at the wrong place. Here we go. This was the C19 crash. Perhaps. Okay, this is what we're going to get. Look at this. Oh, we are in a bull market. We are in a bull market. Oh, not anymore. Okay, this was the March crash, C19 crash, COVID crash. And then money printer went on, brrr, and we just went up. Right? Perhaps this is going to be the flash crash that's going to send Bitcoin to parabolic levels. Okay. Something interesting, I listened to a podcast yesterday. Something interesting to consider is that what happened, legends, what happened during C19, okay, was really an event that no one expected. It was an event where the money printer went on very aggressively compared to all previous cycles to save the economy. Everyone was in lockdown. You know, everyone was scared of the coronaviruses. Businesses closed down. People lost their jobs. It was a fundamental event, disaster event that happened that impacted the entire world. There is some speculation because it was such an abnormal event that happened and there was so much money printing that happened that it could take a little bit longer to reverse those effects. So usually there's a 4-year cycle, 13-month, 12-month bear market, 3-year bull market, 1-year bear market, 3-year bull market. But because of what happened in C19, there is some top economists that speculate that the bull market is going to take longer. So perhaps we're not going to get a 3-year bull market, perhaps we're going to get a 4-year bull market because there's nothing at the moment that stirs, or there's no catalyst at the moment for the money printer to go on. Because there was so much money printing happening over here in COVID, okay, aggressive like we haven't seen in many years over here. There was so much money printing that happened over here that top economists are speculating it's going to take a little bit longer to reverse this damage. Okay, so it's a very interesting point to consider, is to say that, well, perhaps everyone is calling for the bear market. And everyone is saying that the timing model, okay, let us put on the timing model. Right, let me go back up. Let's put this on the weekly time frame. Okay, maybe if it loads up, let's put this on the weekly time frame, put it on lock. Just want to show everyone what do I mean. Okay, and maybe one day when that does load up, oh, here we go. Okay, let's zoom in here. So what some of the top economists are predicting is to say, because of what happened over here, it's going to take longer to reverse the damage that was done over here from a money printing perspective. And when everything goes according to plan, the 4-year cycles play out, okay, there's a little bit of money printing that happens, interest rates goes up and it gets reset, whatever the case might be, but this was very aggressive. This was more than any of the previous 4-year cycles has experienced. So there's some people that's saying that this model will be broken. We are now entering into a bear market. We are not going to finish the bull market at the end of October, right? And it's, perhaps thinking about it a little bit differently is to say that, well, what if the bull market is going to continue? What if we get that dump? Let's say worst case scenario, we get the dump, but we get a much longer bull market. What if the model gets invalidated the other way around? People are saying we're going into a bear market which is going to invalidate the model. But what if it gets invalidated the other way around? What if Bitcoin finds its feet over here and we have a much longer bull market before the bear market starts? That could also happen because the Fed is still trying to reverse the effects of the damage that they caused during COVID. Very interesting just to look at the market from a different perspective is to say that, well, maybe we are going to fall, yeah, but maybe, just maybe, we get a much longer bull market invalidating the model where, we finish the bull market where the bear market was supposed to start. And then the bear market moves a little bit to the left or the right. Okay, interesting scenario. But for now, the model is still intact. Okay, I don't want to speculate on the model being invalidated. We have to acknowledge the model is still intact. And you can see, if you look at where we are in this cycle, let's say Bitcoin takes a dump here to the downside and it finds its feet, there is still time for upwards momentum. There's still time for upwards momentum before we can think about a bear market. Right, it's just very strange to me that everyone has called the bear market to perfection this time around, right? When you hit the tops, you want people to call for $500,000, $1 million Bitcoin. People need to scream for higher levels when you create a top and not just scream for it, believing that it is definitely going to happen. And I just saw too much fear in these highs, which tells me that the bull cycle is not over just as yet. Right, legends, interesting to have these conversations, but now what I want to do now is, okay, worst case scenario, $47,000, right? But we have our targets, $54,000, $61,000, $66,000. This target, from a technical perspective, this looks like the best target. Technically, it looks like the best target. It's interesting to see that the stock market is here already. And if it aligns with Bitcoin, it's basically a swing failure pattern from the lows. You tap the 1.236, it gets acceptance back above. I mean, this is where I will definitely load up like a crazy person, build up a swing position, because this is going to be a juicy area. And I can just imagine that no one is going to want to buy over here. There's going to be too much fear in the market. Right, so legends, now what I want to do now is let's zoom into this little structure, okay, and go and analyze, well, from a trading perspective, what am I looking at? Okay, right, let's go here onto the 15-minute time frame. Well, let's go here onto the 1 hour time frame. I just want to look at something here quick. Okay. Right, let me go through some comments. Let me know what your thought is. Okay, Satoshi, if Bitcoin goes 47K, some altcoins will go to zero. True, it's absolutely true, but it also depends on dominance, right? Yes, it is going to drag altcoins down with it, but what if dominance drops at the same time and it protects the alts so that they don't go to zero? Maybe they go into bear market lows, but some of them still hold on. Okay, and Satoshi, by no means am I saying that we're going to $47,000. All I was trying to demonstrate over here is that if Bitcoin has to pull the same move that the stock markets have done, it will most likely hit $47,000. From a technical perspective, I would say $67,000 to $68,000 looks like a really, really strong support zone for Bitcoin to find its feet. Okay, but then we don't know what dominance is going to do, because if Bitcoin takes a little bit of a dump here to the downside, you can imagine, okay, if Bitcoin, let's say Bitcoin goes up, it rejects and it takes that dump here to the downside, right? If dominance also drops, it can protect the altcoins. I have seen it happen in the past. Bitcoin goes down, dominance collapses, and the altcoins almost stand still or moves with the same amount of percentage as Bitcoin, if not less. So dominance can still protect the altcoins, but we don't know if it's going to happen. What I can say is that dominance needs a correction. It has been pumping to the upside non-stop. Dominance needs to start cooling down at some point, and perhaps it needs that catalyst. It needs a catalyst for dominance to break down. Finally, to break down. Right. How much ETH will be at for we don't know, right? Dewald, what do you think about the scenario in which Bitcoin experiences a period of low volatility and sideways movement until early May without taking the low? I am. I don't think that there's a high probability for it, because based on the structures, okay, I am, interesting username, based on this little triangle structure that we are forming here, okay, on the larger time frame. Let me just do this, zoom in ever so slightly. Based on this little triangle, okay, you see the triangle that we're forming over here, okay, price is squeezing. You know, you have big volatile moves in the beginning, and then the moves starts slowing down. It is squeezing. Based on this structure over here, price needs, so it can still range a little bit inside of the triangle, but it's coming to a decision moment. Okay, it's coming to a decision moment over here. So is there a possibility for price to continue ranging inside of this triangle until May? I don't think so. It's coming to a decision very soon. Okay, it needs to make the decision whether it wants to go up, or whether it wants to break down. It is squeezing over here. Also, based on the corrective structures that I'm counting at the moment, okay, I don't have a corrective structure that continues for Bitcoin just to go sideways without taking the high and without taking the low. Okay, it needs to either take the low or take the high before May, based on the counts that I have. Right, but I mean, the market is here to surprise us, right? Okay, but from a day trading perspective, well, I don't really care, because as long as I can identify my levels of confluences, I can long at support and I can short resistances. Okay. Right, so legends, let's zoom into this little structure that we are forming here at the moment. Okay, so on the 15-minute time frame, this is now the structure that I'm looking at, okay? And very interesting what happened over here. I did not play this breakout, but you can see I've got my alarms set. I wanted to see what is going to happen over here. I saw the breakout, and then I was like, okay, I'm not convinced just as yet, but I've seen this before. I think we've all seen this before. Look at this, right? You now have a little bit of a bullish pennant forming at the moment, okay? Right, we have a bullish pennant. That is a bullish pennant, okay? And what I am waiting for is the breakout to the upside, or the breakout to the downside to take the low. I'm not going to take this long until we break out from this trend. I don't care about this breakout. If you did attempt a breakout over here, your stop loss has to be below the low. Okay, that's the rule for the strategy. And you plan to take profits at the highs. I am not convinced just as yet, so I'm going to wait for this trend to break before I attempt any longs here to the upside. Right, legends, this could be the formation. So, I mean, there's a couple of scenarios that could play out over here, but this could be the formation of an A. This looks like a 1, 2, 3, 4, 5, 1, 2, 3, 4, 5. It looks like it could be a nice little 5-wave structure to the upside. We all know A waves loves 5-wave structures. This looks very 1, 2, 3. It looks like a corrective structure. B waves loves 3-wave structures. Okay, so far I have a A, I have a B, and from this low we could be forming a C back to the upside. And this is now what I'm watching over here. If we're going to get a C to the upside, there's a high chance that we could even come and claim these highs. So I am preparing, believe it or not, with all the fear in the market, Dewald is looking at a long year to the upside. Crazy, right? Crazy. But that's day trading for you, okay? I do not pay attention to the emotional state of the market. I apply my trading strategy with good risk management and, right? So this is just me applying my trading strategy. I didn't play the breakout. Price is nicely consolidating against the trend. It's not getting acceptance back below. It is still forming a higher low compared to this low, and there's a chance for upwards momentum. Right, so I'm not in any long at the moment, okay? Not in any long at the moment, although it is a very good spot to long considering how close my stop loss is going to be. But I would rather wait for this breakout and have my stop loss over here. It's the same risk to reward for me at the end of the day. Right? I just want a little bit more confirmation that price is going to break up and not fall down. Okay, so I'm going to be patient with this trade. Right, legends, and we all know usually on Sundays we get a nice little bit of volatility. So if price, okay, now I need to go and work out targets for this little C wave. Obviously, if we get a successful breakout according to the strategy that I'm playing, I have to take profits when I hit resistance. There is my first resistance over there. And I can tell you guys now, this will be my TP1. Definitely. I don't care if price is going higher. This is resistance. And if I am longing, I take profits when I hit resistance. This will definitely be my TP1. Look at this. Resistance, resistance. Okay, it's just a bit of a deviation, but then you have support, 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 support. You broke it, resistance, resistance. So you can see it's a proven area of resistance to the upside. Definitely a TP1 if we do get a successful breakout to the upside. Okay. And now this is where it gets really interesting. So if this is a ABC here to the upside, you can take your trend-based fib from the bottom of A to the top of A to the bottom of B. And now I can go and work out C-wave targets. Because I have to also acknowledge that this little move here to the upside does look 5-wavy. 1, 2, 3, 4, 5. I can count 5 waves in this little structure. And a C wave needs to be 5-wave structure. So maybe this is 1, 2, 3, 4, 5. That's going to form up here. Okay. I need to give the structure the benefit of the doubt. Obviously, if we take the low, it's not an ABC. Okay. Maybe maybe this was an A, B, and this was the C. This was the teeny weeny little C over here. So this C basically moves over there. It could be a C wave that is very tiny. It has formed 5 waves already to the upside. It's already created 5 waves. You can count this already as a C wave. And now it's going to start creating impulses to the downside. This is why I trade with stop losses, because you never know what the market is going to do next. But for now, I'm speculating on perhaps a bigger C wave here to the upside. Okay, let me just click on the right thing. Okay. First target for a C wave is the 786. That's the first target. It's a little bit of a rare target, but I have seen the 786 being very well respected during this entire range since we made the lows here on Bitcoin. Okay. That little 786 becomes interesting because also if I take now a fib here from the high to the low, right? So legends, all I'm trying to do over here, okay, is if we get a successful breakout over here without claiming the lows, this could be a 1, 2, 3, 4, 5. This is a rejection zone. You have a 50% Fibonacci and you have the 786 and you have a daily level there that has not been tapped. Can you guys see over here? You have an untapped daily level in confluence with the zone over here. It has to be said that this is a little bit of a rare target. Okay. The most common target for a C wave is the 1-to-1 extension and the 1.236. But this one is the most common. And it is beautifully situated inside of the golden pocket. Beautiful. You have the 1-to-1 extension beautifully inside of the golden zone where you take a fib from the high to the low. And what if this price action finds itself up here and then it moves to the downside and then it basically completes the triangle on to the top side and it starts breaking down. So this is definitely where I plan to take profits if the breakout here is successful. Definitely a profit taking zone, but also a shorting opportunity. Because you have to remember, when you take profits at resistance, it also presents a shorting opportunity, depending on how price reacts at those levels. So very golden pocket, 1-to-1 extension. And I mean, if it does get punchy here to the upside, 1.236 together with the 786, this little zone over here. But I will use my fib retracement levels as swing failure lines, because I know how levels gets bloody front run inside this entire structure that we've been forming. Every single level just gets front run the entire time. Okay, right, so those are basically the targets. Fib extensions, okay, this is where I'm looking for short opportunities to the upside. So can you guys see, I don't care whether Bitcoin is going to $47,000. It's interesting to have these conversations. Is the bull market still going to continue? Are we going into a bear market? What is going to happen to altcoin season? It's really interesting to have those conversations, and from an investment perspective, it's the right conversations to have. But from a day trading perspective, I just need volatility. I don't care about the prices here on the side. I don't care. If I spot myself a nice little shorting opportunity, I'm going to take it. Okay, and if I spot myself a nice little long opportunity, I'm going to take it with good risk management. I could trade this damn range. I can trade it and make money. I don't care if Bitcoin is going to $1 million or whether it's going to $47,000. I want a short resistance and I want to take profits at support. I want a long support and I want to take profits at resistance. Okay, so very important that from a day trading perspective, you wear a different hat. You have to have a different mindset. Okay. Hope that makes sense, legends. Now, the question is, okay, so I want to now zoom into this little structure. AB. Right, the first thing I want to go and check out is that if this is the corrective structure, okay, it has a chance, right? I just want to put this on a little bit better. My trend, my trusty old trend. Let's make that white, make it nice and thin. Okay, there's my little bull flaggy that's building over there. I want to see what CVD is doing at the moment. Let's refresh this. I want to see if I see signs of strength or if I see signs of weakness at the moment. Okay, I still see a little bit of weakness. But there's no bearish CVD as such. Okay, no bearish CVD at the moment. Right, okay, cool, legends. If I'm counting this as an impulse, this is now what I'm looking at. If you're counting this as an impulse, you can use this A, B, C structure. Okay, you take your fib from the high to the low to the high. Now I have my corrective structure targets. Okay, if price comes down and makes one more low at the 1.236, I can also use this as an SFP line. Price dips below. If it gets acceptance back above, this is where I long with my stop loss below the low, and I don't have to wait for the breakout because the risk management is way better inside of here. Way better. Okay, but it has to tap the 1.236, right? If it does not tap the 1.236, like it's front running it at the moment and it breaks out, well, then there's another longing opportunity for me. Right, this is why I have the trends. It's my backup. It's my front-running strategy that I need to apply. Okay, I'm waiting for my levels. My levels don't get tapped, and then there's another way for me to get into the trade. Okay. Also, what I want to see quickly is if I take a fib here from the low to the high. Okay, so that 1.236 also has perfect confluence with the 786, which should be your maximum retracement target. So if this is a 1 and it's creating a 2 over here, right, you want this to be your maximum target right over here, because this could create a 1, 2, 3, 4, 5 there to the upside to go and complete your C wave. Okay. Now, legends, we always have to look at both sides of the coin, okay? Always have to look at both sides of the coin. And remember, if you'd like to come and trade Bitcoin here with me, links down in the description where you qualify for the biggest sign-up bonuses and lowest trading fees. I've got Weeks, Bluffin, and Phoenix, okay? So if you're wondering where to trade Bitcoin, the links are down in the description where I've organized you the best deals. And it's also your way to support the channel, okay? Right, legends, now I have to talk bearish as well. What if we fall down? Okay, we fall down. Okay, we do have some levels here to the downside. Right, let's go back here onto the 15-minute time frame. Okay, from a balancing perspective, it doesn't make sense to start falling down at the moment, but we have to be prepared. Okay, so we still have, well, on Binance, the Binance perpetual contract that I'm trading over here, the daily level and the weekly level has not been tapped. On Bybit, I saw that this little low grabbed the daily level, but it didn't tap the weekly level. So if price falls here to the downside, in this zone, I will not attempt any trades. No trades for me to be taken inside of this zone. I will not consider a swing failure from this low, or from this low. I'm going to wait for price to see what it does when it hits this zone, because there is a lot of people watching this zone. And I don't like it when a lot of traders are looking at a specific area of confluence. The market loves to smash it, okay, and go to the next area. Everyone that had their limit orders over here, 100x position, 25x position, 50x positions, okay, they will get liquidated, right? The area to the downside that looks the best for me is, yes, I will pay attention to this zone. I don't like it because of how many people are talking about the $80,000 600 zone. There's just too many people talking about it. It is obvious support, and when something is obvious, I don't like it. I like this level over here at $78,567. And also when you zoom out, it has confluence more or less with the 786 level. So if you take a fib from the low to the high, okay, you can see that that daily level is here, smack bang between the 786 and the 0.88. This is the zone that I like the most for a potential bounce. If price continues down here, maybe you get that bounce, you make everyone happy, but it rolls over. So you need to get in and out as quickly as possible, because you have massive resistance over here, underbelly resistance. You can just see it looking at the price action. Okay, $82,700, massive resistance. What if you do get the bounce? You get in, you bloody take profits over here, because guess what? The structure could be rolling over and it goes down. And it stops out. Everyone liquidates their positions because they didn't pay themselves, believing that price is going up, and it doesn't. It rolls back down. This is a very interesting zone that I'm still keeping an eye on. We have a daily level which could be front run again. From a simplicity perspective, okay, I'm going to keep an eye on the 786. But more importantly, okay, let me take some of these fib levels out the way. Let me zoom in over here. So now I'm looking at this structure as that bullish structure. 1, 2, 3, 4, 5. This is an A, B, C, still completing here to the down, but basically a 3-wave structure. I don't care if it's a WXY, I don't care if it's an ABC, it's a damn 3-wave corrective structure. So if there's any chance for the bulls, for this 5-wave impulse over here, there's a chance that price can find support in this zone and shoot back to the upside. And I can measure that target. That's the beauty about technical analysis, is you take your trend-based fib from the high to the low to the high, okay, to go and measure your 3-wave structure targets. And the most interesting one is, yes, there's the 1-to-1, very common. It is in the zone. We have not tapped it. So maybe we get that. Okay. But look at this one. 1.236 and the 786 are married over here. They got married. Right? Perfect confluence. This is where the planets align. Above the daily level. I wouldn't be surprised if we do this, 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 and then get the bounce to the upside. And that is if we do lose the level from where we are right now. Okay, take the low, and this ABC is invalidated, and the C wave ended over there. I hope this makes sense. Okay, right, legends, let's go through some more comments. Let's look at the 5-minute. I just want to see what the structure is doing here at the moment. I mean, if this is starting to form impulses here to the downside, which it could, okay, if this is forming impulses here to the downside, 1, 2, 3, 4, 5, you could get an ABC and 1, 2, 3, 4, 5 back to the downside. Okay, so yeah, you need to be aggressive with profit taking, definitely. I mean, you know, it does look impulsive here to the upside, but I'm also just looking at the structure here to the downside to say that, well, what if this is forming a 1, 2, 3, 4, 5? Remember, now your impulses are to the downside. You make a 3-wave corrective structure. It does not take the high, and then it falls. Okay. So I can tell you guys now, if I do attempt a long over here, I will be aggressively taking profits when we start hitting these pivots. Okay. If there's no bearish CVD, then we're going to have a higher chance of continuing to the upside. But if I see weakness against these pivots, bearish CVD, I might just close my position and get out. Okay, so price needs to show me what it wants to do once it breaks out, or if it does break out to the upside, because this also looks very impulsive here to the downside. It looks impulsive to the upside, and it looks impulsive to the downside. I can count 5 waves here, and for now, I can only count 1, 2, 3, 4, 5. Yeah, it looks 5-wave both ways. It's not an easy zone where we are in at the moment. Okay, Dewald. Right. What do you think about BTC death cross? I don't really pay much attention to the death crosses and the golden crosses because they are lagging indicators. Okay, what I do know from a backtesting perspective is once those golden or death crosses occur, price likes to gravitate back to that cross, if you like it, if you will, right? But it's usually a sign of damage that's already been done or is almost done. Okay, a death cross is not for me a sign of now the shit only starts, or now the bull market is only starting when you get a golden cross, because it's a lagging indicator. And most often those death and golden crosses has created so much, what is the word? Right, unreliability. Okay, I've seen death crosses and golden crosses inside of the last bear market. Okay, I've seen golden crosses. Yes, now the low is in and we just continue to fall to the downside. Okay, we've also had a couple of death crosses during this bull market, and it signaled the low and price continued to the upside. So I don't really pay much attention to it. Okay, that's my answer. Right, I'm a technical trader. I trade level to level. I don't need to look at death crosses and golden crosses to to trade. I don't have to. Okay, less is more for me. The less indicators and things that I pay attention to, the more successful I am in my trading, because it impacts your emotions. Okay, if you have that, oh, death cross, death cross, death cross, death cross. Okay, I should be looking for shorts. I should be looking for shorts. Then you're going to miss out on all the longs. Okay, here was a beautiful long here to the upside, right? Here was a beautiful long. Okay, SFP from the lows. We spoke about this low. Got momentum here to the upside. There was a beautiful break of trend. Somewhere there was a break of trend. We played the break of trend. You will miss out on all the damn longs to the upside because you are in such fear from a death cross perspective that you're only going to be looking for shorts, and you might not get that epic drop to the downside. Maybe, this is a bullish structure that's building here on the 1 hour time frame, and we're going to break up. So I only pay attention to the technicals in front of me. Hi, Dewald, can you please check XRP? Some altcoin requests. Mr. SGS, welcome, Dewald. You have a super chat. Do I have a super chat? Oh, I see it. Thanks, SGS. Super chat. Thank you so much for the super chat, James. Dewald, can we have a look at the Bollinger Band on the day? Thanks, legends. Keep up the on-point counts. Right. I know some Kyle Dupes, he likes to look at Bollinger Bands. He swears by them. I'm not a particular Bollinger Band type of person because it's not part of my trading strategy or my style. But let me try and entertain you, James, over here and see if I can get the Bollinger Bands to work over here. I've personally never used them. I've never had to use them. Okay. Right, indicators. I'm just going to go with the first one over here and let's see. Okay, on the daily time frame. So for those of you that don't know Bollinger Bands, it's basically when it starts expanding, when they start coming together, it usually signals upwards momentum. When they squeeze like this, you're either going to get a breakout or a breakdown. But for me, it just, it's squeezing together. The question is, okay, are we going up or are we going down? No one knows. Right. We are here in the middle of the band. We are struggling to break the 50% equilibrium, if I can, for the lack of a better word, and we're still trading below, which increases the probabilities that we're going to break to the downside. It's not something that I need to trade with, okay? It's interesting to look at. So, James, thanks for the super chat. But the only thing that I can see over here is that they are squeezing together. And when Bollinger Bands squeeze together, it means that there's a big move incoming. Okay, and if you are trading below the 50% Bollinger in the middle, okay, the moving average in the middle, the chances increase that you're going to break to the downside. And at the moment, right now, based on the price action that I see today, we are trading below the blue line, which means the probabilities are higher to break down. But what if it pops back up? Then what? Okay, so it's not something that I use as part of my day trading strategy, but it is something nice to look at from a larger time frame perspective if you, from an investment, or you want to buy some altcoins, or whatever your preference is. Okay. Yeah, I mean, it was so squeezy throughout this entire range over here. Okay. Anyways. Right, legends, that is basically the Bollinger Band over there. Okay. Dewald, in the last impulse, one to the upside and the latest one to the bottom, the wave 1 has been touched by wave 4. Do you look at that or ignore them until further confirmation? Last impulse, one to the upside, and so Wayeb or Wahab, I'm not sure which time frame you're referring to. Okay, are you referring to the small little structure that I've spoken about here? Are you referring to this? Okay, are you referring to this? You need to be a little bit more specific. Okay, The smaller ones, the latest ones. Okay, cool. So let's zoom into that structure. Let's go to the 5 minute. If wave 4 touched wave 1, then you have to look at diagonals, because they are allowed to touch each other if it's building a diagonal. If it's an impulse, they're not allowed to touch each other. Okay. So this could be a 1, A, B, C, 3, 4, 5. 4 does not touch 1, because this could be 1, 2, 3, 4, 5. This is an A, B, C corrective structure for the 1. This is 3, this is 4, and this is 5. So it can be counted as an impulse. Okay, if this is 1, 2, 3, 4, and you're counting this one, there's overlap. So that has to be a diagonal to the downside. Okay, so it needs to be counted as a diagonal. And then basically how that works is that the waves are allowed to overlap each other as long as, but you basically have the contracting diagonal. Okay, you have 1, 2, 3, 4, 5. Okay, 4 and 1 overlap, so it has to be a diagonal. It's not an impulse anymore. In Elliott wave theory, 4 has to overlap number 1. It's preferred. If it doesn't overlap, then you're looking at an impulsive structure, and this is a contracting structure. Okay, so it's allowed. It's allowed. I think what's interesting, I just want to take some of the noise here out. Let's just hide everything that I've got here. I just quickly want to have a look at it. Okay, so now if you're looking at a contracting structure, okay, you have to take your trend from 2, 1, 2. You drag your trend down, and you have to take it from 1. So if this is 1, you have to do this. To 3. Now that doesn't look really contracting to me. It actually looks parallel. It really looks parallel. So if, okay, let's put it in here, okay. I like these types of questions. If this is 1, 2, 3, 4, and we're going down for 5th wave over here, okay, the rule states that the 4th wave is not allowed to touch the parallel. So you put a parallel from 1 to 3, you drag it to number 2, and if the 4th wave taps the channel, it's not a contracting. It's an expanding triangle, which is extremely rare in Elliott wave theory, never preferred unless all scenarios fail. So based on your question and what I'm seeing over here, there's a higher chance that this structure is corrective and not impulsive. So thanks for that. It's actually given me now the probabilities remain higher to still look for upwards momentum. That's a very good observation. So thanks for that. Because 4 overlapped 1, you have to think of triangles or diagonals. Expanding structures like the parallel channel, as soon as it taps, if your 4th wave taps the channel, it's an expanding structure, which can happen but is extremely rare. So now you're looking at probabilities. So if an expanding structure is rare, and this looks more impulsive, it means that this is a higher chance of being corrective, and you could break out for higher levels. So very good observation. So based on what I've just analyzed over here, there's a higher chance, okay, dare I even say it, to take the high before we take the low, based on this. And that is just theory at the end of the day. And remember, it's just all based on a game of probabilities. You could still fall down. And then this was an expanding structure, which is rare, never preferred unless all other scenarios fail, but it can still play out. And this is why we trade with stop losses, because sometimes the rare probabilities do play out. So I think the interesting thing for me is that looking at the structure from a Fibonacci perspective, we have now officially tapped the 786, which is the maximum target that you want to see. That if this is impulsive and this is corrective, you really want price to find its feet where it is at the moment. If you tap the 0.88, you increase the probabilities of taking the low. Never guaranteed, it's just a game of probabilities. Also, when I then now look at the structure as not a 5-wave structure, so I'm now looking at this structure as an AB. Let's just call it a simple ABC, W, X, Y, but a three-wave structure. A, B, C, which now ended over here. Okay? Or maybe it's going to make another low. I don't care, right? Then you can take your trend-based fib to measure the structure to the downside. Okay? A, B, C. And we have just tapped the 1.236, which is a C wave target. You can see that the 1.618 is also a C wave target, but then you're going to take the low, right? You're going to take the low. So this is where the corrective structure has to find its feet. So very interesting. So thanks for that question. Wahab, very good question. Very interesting spot. I mean, just looking at the structure, it looks like a 1, 2, 3, 4, 5. But now when I actually applied the theory to the structure, it's corrective. There's a higher chance that it's corrective and not impulsive. This is impulsive, this is corrective, and it could find its feet and continue momentum to the upside to go and claim the high. So very, very, very interesting. I just wish CVD would play ball because CVD is not showing strength at the moment. Dewald, in your personal opinion, what do you think of this bull cycle? Are you still sticking with your original plan of exiting September, October this year? Yes. For now, until proven otherwise. As long as I see strength, so let's say the bull market continues to the upside, we get one last dump, and I still see strength. My exit strategy is quite aggressive when we start hitting those time frames. But I will always leave a moon bag open. I'll always leave a moon bag open. Right, but let's get closer to the time and then discuss those strategies again. For now, I'm still sticking to my plan. That's my plan and I'm sticking to it. Okay, I'm sticking to this plan over here. Right, this is where I plan to exit most of my positions. But there's a couple of other things that I will also look at because I know that there's a potential for the bull market to extend. There's a potential for the bull market to extend a little bit. Right? Slightly past 4 years. Absolutely normal. Maybe the bull market's going to end over here and then the bear market's going to end over here. Right? So depending on what I see, I might definitely take profits over here. Okay? I also have targets of where I'm going to take profits on every single token that I have in my portfolio. Right, Bitcoin, I'm just not planning to sell my Bitcoin. Whether Bitcoin goes here, whether Bitcoin goes here, whether Bitcoin goes there, I'm not selling my Bitcoin. My Bitcoin is forever. Until the day I decide to, maybe go on pension and enjoy a little bit of my free time, then maybe I'll take 50% profits. But Bitcoin is not something that I plan to sell. Perfect. Thanks a bunch. Thank you so much for asking that question because now it's actually clarified the structure for me here as well. So at the moment, based on what we're seeing is there's a chance that we could get a bounce in this zone. Okay. Right. Why would the market makers give us such a good chance to get into good short positions? What do you mean? Why would the market makers give us such a good chance to get into good short positions? Right? I'm not sure because maybe people do not know where to short. People do not know where to take profits. Okay. I don't know. I'm not sure. TM, I'm not sure how to answer that question. From the 76K low to the 88K high. Yes. We are at the 50% fib. Let's go and check that out. Okay, let me just clean up the chart. Okay. From the 76K low, so, okay, we're looking at this entire structure. To the 88K high, yes? We are at the 50% fib. Oh, okay, yeah, I see what you mean, right? Yeah. I mean, it's just been chopping. It's just been, since you made the high over here, it's tapped the 382, it's tapped the 50%. It's not a level that I'm paying attention to. The most important fib levels to pay attention to inside of this structures is the ones that have not been tapped. So if price falls to the downside, this one has not been tapped. This one has not been tapped. This one has not been tapped. So when I look at a structure and I have a retracement that's tapped some of the levels multiple times already, you can see when we made the high and we tapped this one for the first time, we got a nice little bounce. Then you come back down, okay, you get a reaction at the 382. You came down, you tapped the 50% and you just chopped through it. Eventually you find upward support, but for me, the interesting ones is the ones that we have not tapped. That is the interesting ones, these ones. I don't care about the 50% at the moment. I will rather zoom into this structure and go and analyze it, and then do my fibs inside of this structure like I've just done. Okay, the larger time frame fib only becomes interesting when you have untapped levels, for me. Okay, so I don't care that it's at the 50% fib. What I do care is the smaller time frame analysis that I've just done. Okay, here on the 5-minute time frame, looking at this structure. Now, this becomes interesting. Fib from the low to the high. We have now tapped the 786. Because it's tapping the 50% on the larger time frame, I don't care because I'm analyzing this structure. I want to trade this structure. This is what's important to me. I do not look at the larger time frame structure because this level has been disrespected. It's been in and out and through and sideways through this level multiple times. What are the chances that that macro level will now be respected? If it's going to be tapped for the first time, yes, then you could get a reaction. Then it's important to look at that level. But for now, a fib from the low to the high, a retracement target from a trend-based fib perspective, 1.236, that's now where it's becoming interesting to me. The local structure, because I'm a day trader. I want to get in, I want to take profits. I want to call it a day. I want to say I've made some profits. Happy days. Okay. Right, legends. Oh, I see. Thanks, man. Jimmy, absolute pleasure. Right. Do you look at some indicators like money flow or accumulating USDT in Wales portfolios, Veriside? I do look at fundamental news. I watch Matt. If you guys haven't seen Matt, okay, his link is down here in my description. Andy, as always, is my partner in crime. We do technical analysis together. Our analysis is very simple. I like to say that we often say the same thing differently. Okay, some people watch his analysis and my analysis. It's sometimes exactly the same, but people get different ideas from how he sees the market and how I see the market. Matt here is the only person that I follow from a fundamental perspective, but no, I am not a fundamentalist. I only trade technicals. I'm a technical trader. That's what I do. I trade the technicals in front of me. I do not look at anything else. Money flow. I mean, you can go. When I started out, make no mistake, my chart looked like, I can show you guys now, okay? When I started out, I had 10, 20 indicators, right? I even bought the Pro Premium package on TradingView because it gave me messages saying that you don't have, you need to increase your subscription. You can't have more indicators, right? And my chart used to look like this when I traded. Okay, I had moving averages. Let's just do this as well. I had stochastic RSIs. I had the MACDs. I had the 200-day, the 50, the 20, like everything on my chart. I looked at money flow, money order, liquidity, heat maps. I looked at everything. And I didn't make money. I struggled. Okay. I can tell you guys now the lesson that the turning point for me when I started turning profitable was less is more. That's what worked for me. Okay, you have to remember the aim of the game at the end of the day is to protect your cash. If you can learn to lose properly, okay, that's it. You just need to learn to lose properly. The rest will follow. Less is more. And often now I see, okay, so when I used to trade in the beginning as well, this is what my chart looked like. You can't even see where price is at the moment. I had everything on my chart. I also looked at the S&P 500 and the Nasdaq for guidance. I looked at USDT dominance. I looked at the Nasdaq. I looked at the S&P 500. I looked at the DXY. Okay, I looked at everything to try and make a trading decision. And I went into analysis paralysis. The one indicator tells you you need to short. The other indicator tells you need to long. Okay. The S&P 500 is pumping. The Nasdaq is dumping. Fuck, what do? Do I long? Do I short? You can get stuck as a trader. Okay, because the things starts contradicting each other. And then, magic happened. Okay. I started realizing that I need to learn price action. I need to clean up my chart. I need to remove all the indicators. Okay, I need to ignore the noise. If I'm trading Bitcoin, I need to only focus on Bitcoin. I need to trade the chart in front of me. And this is why today, when I trade, my chart looks like this. I know exactly the level that I'm watching for potential long. If we take the low, okay, we're most probably going to come down, right? I trade the price action. The only indicator that I use is CVD, just to see if I see strength or weakness in the market. It's the only indicator that I use. I do not use the stochastic or RSIs as part of my trading strategy. Right, but I still see weakness in CVD, and it's not giving me a lot of confidence to long here at the moment. Okay, it's based on the analysis that I've done here on the 5-minute time frame to say that, well, what if this is, okay, it looks like this is more impulsive, 1, 2, 3, 4, 5. This looks like it's more corrective based on the analysis that I've just done, but I'm not seeing strength in price. I'm not seeing strength. And what do I mean by strength? I'm so used to the CVD indicator. I don't have to draw lines to try and make sense of it. I can just look at it and tell you now that I don't see strength. For me to see strength, you see this pivot over here? Okay, this pivot on blue, I want CVD to be there. I want that. I want to see strength. I'm not seeing strength. White is up here. It needs to be down there. Yellow, also, it needs to claim the low. I want CVD to make lower lows, and I want to see strength locally, and I don't. I don't see strength locally. This concerns me from a longing perspective. Often, what I will do is I will trade the price action in front of me. I will trade the price action in front of me, and I will use less capital. So instead of using 1% of my portfolio, I'll use 0.05 or 0.02. Okay, because often I have seen that there's no indicator that is perfect. CVD that you're seeing over here is 74% accurate from a backtesting perspective. So it's going to have a time where it shows you strength, a weakness, and it pumps out of nowhere to the upside. I have seen it happen. But in those instances, remember, I trade probabilities. So if I have a 74% probability that I'm not seeing strength in the market, I will use less capital. I don't care whether it has that 16% chance of being wrong, because I trade probabilities at the end of the day. And based on my probabilities, if I saw strength over here, if CVD showed me strength, okay, you have lower lows over here, right? Even against this pivot, I want to see strength. I'm not seeing strength at the moment. But if I saw this, you're hitting the 786, there's strength from a CVD perspective. It looks good. The 1.236, the 786 Fibonacci retracement, I will then apply or deploy more capital. I will take on more risk. Maybe I can even go in with 3% to 5% of my portfolio. But it comes with experience, and I do not recommend it unless you're already profitable as a trader. Okay, so the more boxes I can tick, that benefits or shows me that a long is highly likely and I have more boxes that I can tick, the more risk I will take on. The less boxes I tick is not to say that I won't enter the trade. I will just use less capital. Okay, you have to have those systems and processes in place. You have to follow your rules. You have to stick to your rules. Remember, the aim of the game is not to see how much money you can make. The aim of the game is to see how well you can protect your cash. Okay? And how many trades you can play out to perfection. So if you're planning a trade over here and maybe say, okay, I'm just willing to take a trade like this. I'm going to put my stop here by the 0.88. Okay, my stop loss is 0.16% away. My risk to reward is 4.68. It's absolutely phenomenal. Your focus should always be on this. How do I protect my cash? How do I enter with losing the least amount of money, my money? It's the only thing you can control is how much money you're going to lose. It's the only thing you can control. How much money am I going to lose? You need to control this. The market will take care of that. Okay. Right. People have it the other way around. Everyone focuses on how much money they're going to make. Right? They have the stop loss all the way down here. Price drops and they add to their position and they add to their position. And by the time price gets down here, they liquidate their account because they're so focused on how much money they're going to make with the trade, they don't focus on this. And this is actually the only place that you're supposed to be focusing on. This, you're supposed to protect your cash. Okay? Your job as a technical trader is to protect your cash. That's it. That's your job. That's your only fucking job, is to protect your cash. And to know where to take profits. That's secondary. Know where to take profits. But if your focus is how much money am I going to make from this trade, you're most likely not going to succeed in this game. Right. Anyways, legends, that's my little rant for the day. Right. Yes, you and Andy say the same things in different ways with the same targets. Yes, Talma, I mean, even sometimes I've seen that Andy will analyze an Elliott wave structure slightly different to me. And then people will come to me or Andy and say, well, Dewald, Andy counted that as an ABC, and you are counting it as a 1, 2, 3, whatever the case might be. And then often I will go back to the people and say, but did you see where Andy is looking for a short? Did you see where Andy is looking for a long? Did you see where I'm looking for shorts and where I'm looking for longs? Did you see where I'm taking profits? It aligns. So often, even if you're analyzing something differently from an Elliott wave perspective, looking at the price action, we know where to look for the shorts and we know where to look for the longs. It doesn't matter if the counts are the same or not. Okay. Right. Andy is good, but he lets one hater ruin his day. I must say, I have seen Andy get a little bit upset when someone gives him hate in the comments. Preach, brother, preach. Yes, I just had to get that in, guys. I just had to get that in, okay? You know, it frustrates me when people are so focused on the winning side of trading. Yes, that is the rewarding side, okay? But I don't think a lot of people spend time, the needed time over here, okay? This is where 99% of your trading effort needs to go into. Why am I entering the trade? What are my rules? Am I sticking to my rules? And where am I going to get invalidated? And you almost... Not even almost. You need to make peace with the fact that every time you enter a trade, you are going to get stopped out. That's the mindset you need to go in with. If it's guaranteed that I'm going to get stopped out, how can I manage this better? How can I lose less? How can I use less capital? Maybe I should rather try and only enter trades that have a higher risk to reward, so that if I lose 2 of these, but I win 1 trade, it pays back both the stop losses of the trades that I've lost. Like, you know, everything that you do inside of trading should be focused around this. The first 2 W's. Why am I entering? where is my risk management, and also where is my stop loss, not how much money am I going to make. It should only be where. Why? Where? Okay, right, very important. But these two are the most important, and a lot of people actually struggle with this one as well because they only see how. Okay, and they don't know where to take profits. They see how much money they're going to make, but for some reason they don't know where to take profits. Right. Cool, legends. I have run out of time, unfortunately, on a Sunday. There's still a couple of things that I need to go and do today before the weekend is up. So have yourselves a fantastic day. Remember, legends, if you'd like to come and support the channel and trade with me, the links for the exchanges that I use are always down in the description, where you only need an email and a password, where I organize you the best deals, the lowest trading fees, the biggest sign-up bonuses, money that gets airdropped into your account, 50% on weeks from a features account, 10% on bluffing, regardless of the amount. Okay, have a fantastic weekend, and I'll see you all tomorrow. Until the next one, just for now.